Hey everybody, this is Jim at SP500chart.com. It's about 5:15 on April 3rd, 2014. We're going to take a look at the S&P 500 chart after I remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking at a 30-minute chart, all we really need to look at today is pretty simple because we traded in a fairly narrow range today, and there wasn't really that much to write home about. I mentioned that we had been in this kind of a rectangular consolidation pattern for the past, about 4 weeks, 3.5, 4 weeks. And this came after we broke out of what appeared to be another one of those inverted head and shoulders patterns that was somewhat truncated. I'm going to get rid of my moving average information here real quick. Just going to make that go transparent. So we were in this pattern really through January and through near to almost the very end of February. This pattern has a target now that we're above this resistance level right here that was our neckline. And again, I remind you that was kind of a range more than a specific level, because we just had a little bit of noise in this area, so things didn't line up just so. But we got over this area. That told us that we should be looking at a target of about 1958. We got up to 1884, came back down to our neckline, back up to 1884, back down to our neckline. Then we came up to 1884 again and got over it. Now, so far, this now marks the third day in a row that we have been over our neckline of 1884. We are still not a full percent, nor have we ever been a full percent over that level. And to be frank, that level would not be reached until we broke 1900. So I think that's going to be an important level for us to reach. If we can get up over about 1884, about 1902, 1903, something that closes over 1900 should be kind of the last, I don't want to say the nail in the coffin, but why not? The last nail in the coffin for short-term bears. Now, what are we looking at? We've got a little bit more data, I think, at this point, to where I'm going to make a rough stab at establishing some trend lines, maybe working off of the lows of the 27th. Okay? So we're going to do that with you here. And basically, now that we have this little dip that we saw today, right here, just a hair under our neckline area, by the way, but not by much, I think it's pretty, I think it's a pretty decent trend line right here. Again, this could get adjusted at some point in the future, but for now, let's make that green, and I'm going to stick with that. So we have 1, 2, and then the lows of the day as being 3 touches on that line. Now let's snap a parallel line and see how that serves up here at the top. Well, you know something? We got 1, 2, 3 clear touches on this line, and then one little one that came over the top of it. So let's leave this here, and let's see if this continues to operate going forward. Now, if it does, then that means we should be lining up for a move over 1900, and it should happen pretty soon, because as you can see, we're just 2 days away. Actually, the end of trading on Monday, this support line will be over 1900. So if this channel works, then we have to be over 1900 by the close on next Monday, April 7th. So guys, we've talked in the past too about how sometimes you get a little pattern that takes you up to a resistance line, then you go sideways, and you go up and tag it again. That may be kind of what we saw here. We may have seen a little channel, maybe even a little bit of a wedge move us up off of this low right here. You see there, we come off this, and then we work our way up in this little wedge. Then we're forced to go sideways. As long as our neckline holds and we stay in this channel, then we should be in real good shape. And like I said, we've got a target based upon that larger inverted head and shoulders pattern. And again, this is the truncated variety. We've got a target all the way up here about 1958. So interesting to note, we are now about 2/5 of the way there off of our lows of 1840. So guys, let's just kind of hang with it, see if we continue to stay over this neckline, see if we get some strength in the markets tomorrow and early next week that can push us up over 1900. Then we can fall back, we can go sideways for a little bit, and with the idea that by the time we get into the middle of May, I think we have a clear path to that 1950 area right here, because that would then be in an area of the chart where no rising resistance line that we are currently now under would have to be violated. Does that make sense? In other words, I wouldn't think it would be possible for us to make 1958 next week. I think there's too much resistance. Too many of these lines that have broken should serve as resistance to keep us from getting there. But I think we could go up for a while, maybe break this green channel at some point, consolidate, and then sometime, like I said, around the middle of May, we have a high enough ceiling with all of these resistance lines to where that 1958, I think, becomes very doable and not unreasonable whatsoever. So guys, here's your video for April 3rd, 2014. I appreciate you taking time out of your day to watch this. Thank you so much for your support, and let's see what the markets serve up over tomorrow. We'll do the weekend video, and then we'll have maybe a little bit better feeling for what we may be dealing with next week. Thanks again. Take care.